Now let us do question number 3. Question number 3 is a different kind of example. Q limited. Now in this example, if you observe, okay, it is the structure of this example is very different from what was given to you previously. Q Limited sells goods at a uniform rate of gross profit of 20% on sales, including depreciation, as a part of cost of production. Now you are given that gross profit is 20% of sales, which is quite understood that it can be 25% of the total cost as well. You are given sales, material consumed, wages, manufacturing expenses, which are cash manufacturing expenses, administrative expenses, which are also cash expenses, and sales promotion expenses. Company keeps 1 month stock of each raw material and finished goods. A minimum cash balance of 80,000 is always kept. Company wants to adopt 10% safety margin. There is no work in progress. Okay, you have to find out working capital for this company. Now, how do you approach these examples? In these examples, what you are required to do is you have to find out something called as cash cost of production. Cash cost of production. Now, how do you find out cash cost of production? It is very simple. So, see, you are given material. Material is 6 lakhs, right? You are given wages. The wages is 4,80,000, and you are given manufacturing expenses, which are cash manufacturing expenses, 6 lakhs. If you make a total, you will get 16,80,000. This is your cash cost of production. Okay. Then you are given administrative expenses and sales promotion expenses. So let us add administration expenses. Administration expenses 1,50,000. Sales expenses or sales promotion expenses, you can write selling and distribution expenses. These are 75,000 per year. Make a total, you will get cash cost of sales. Cash cost of sales will be 1,09,000. Sorry, it will be 19,05,000. 19,05,000. Okay. So here in this example, if you see, depreciation has no role to play because you are given this manufacturing expenses in cash itself. Okay. Suppose you were not given this, what will you do? So suppose you were not given manufacturing expenses in cash. Let us say sales is 24 lakh in this question, right? Or sometimes you need to find out depreciation. Some circumstances may be such in any given case. Minus gross profit at 20%, it is 4,80,000. So if you subtract gross profit, you will get cost of goods sold 19,20,000, right? Now this 19,20,000 is not cash cost of goods sold. It includes depreciation. But how much is the depreciation? So from cost of goods sold, if you subtract cash cost of production as calculated above, 16,80,000, you will get the amount of depreciation. Depreciation will be 2,40,000. Okay. Just in case you need to find depreciation. Okay. Or let us make it very simple. Let us say this is your trading account. Here you write sales, say 24 lakh. On the debit side, you will write say material. Material is 6 lakhs. wages is 4,80,000 and manufacturing expenses in cash is 6 lakhs. You are also told that gross profit is 20% of sales, which is 4,80,000. Now total of both the sides should be 24 lakh. But if you see, this side has something missing, which is nothing but depreciation. It will be 2,40,000. So whichever method you use to find out depreciation and cash cost, ultimately what we need is cash cost. Okay. For this example, this calculation is enough. The other two is just for your explanation. Okay. Now let us find out working capital in this question. First part would obviously be current asset. In current asset, raw material. See the question, you are given material 6 lakhs. Now see material 6 lakhs, but in bracket, in the paragraph below the table, they have told company keeps 1 month stock of each raw material and finished goods. Okay. So if material consumed during the year is 6 lakhs and stock is 1 month, so into 1 by 12, the stock of raw material will cost 50,000. That is your investment in raw material at any given point of time is 50,000. You are told that there is no work in progress, so you don't need to worry about it. Then finished goods. Okay. Now, how do you value finished goods? Okay. So finished goods are valued at cash cost of production 16,80,000. So the total cost of making finished goods during the year is 16,80,000. In the paragraph below, you are told that finished goods is kept in stock for 1 month. Okay. So 1 month's worth finished goods. So 16,80,000 divided by 12. 1,40,000 worth finished goods is in stock. Then you are given debtors. Debtors will be, now what is your investment in debtors? Debtors means you have already sold the goods, right? And when you have already sold the goods, debtors should be valued at cost of sales. That is, you have incurred administration expenses also and selling and distribution expenses also. So debtors will be valued at cash cost of sales 19,05,000. Now see sales into bracket they have given at 2 months credit. So this investment or the funds are getting blocked for 2 months. So 19,05,000 into 2 by 12. Your investment in debtors is 13,17,500. Okay. You are given sales promotion expenses. Into bracket you are given paid quarterly in advance. That is prepaid expenses. That is nothing but current asset. Prepaid sales expenses. So total expenses is 75,000 and 1/4 is paid in advance. So 75,000 divided by 4. So quarterly 18,750 for 1 quarter. You are paying in advance. That is your current assets. And in paragraph below, you are also given that there is a cash balance of 80,000. So these are all current assets. Make a total of current assets, which is also called as gross working capital. Total is 6,06,200 and 6,06,250. Okay. Now B, current liabilities. In current liabilities, first creditors. So from creditors, we buy materials. Material is 6 lakhs. And see, in materials, suppliers credit 2 months. It means you are given a credit of 2 months to return the amount for the purchase of raw material. So 6 lakhs into 2 by 12, it will be 1 lakh. 1 lakh is outstanding to creditors. Then you are given wages paid monthly at the beginning of subsequent months. So if suppose you are in December, you will pay wages of December in January. That is 1 month's wages will be outstanding at the end of every month. So outstanding wages. So total wages of the year is 4 lakh 80,000, and 1 month wages is outstanding into 1 by 12, which makes it to 40,000 outstanding wages. Manufacturing expenses, cash expenses are paid 1 month in arrear. So manufacturing expenses are also 1 month in arrear. So if manufacturing expenses are 6 lakhs and they are paid 1 month in arrear, okay, it means 50,000 of manufacturing expenses are outstanding. Administrative expenses, total administrative expenses 1 lakh 50,000, and you are told they are also paid 1 month in arrear. So into 1 by 12. So 1 lakh 50,000 divided by 12, 12,500 is outstanding. Right. These are all current liabilities that you have. So make a total of current liabilities, total current liabilities. Let us call it as B. So 1 lakh. Total is 2 lakh 2,500. Net working capital, it is current assets minus current liabilities. It is 4 lakh 3,750. Add, you are told that 10% is to be kept in contingency. So 40375. You will get working capital required 4,44,170. Sorry, 125. So this is a different kind of example. Okay? Kindly practice this kind of examples also.